You've got $100,000 sitting in your account. You could toss it into a savings account where it'll earn, 0.5%? Or maybe we're thinking about bonds. Safe, sure, but not exactly wealth builders. What if I told you there's a better option? One where your money could work harder for you, generating regular income and even growing over time. That's where dividend stocks come in. In this video, I'm going to show you 5 of the best dividend stocks you can invest in today. Companies with a proven track record of paying reliable dividends and growing over time. I will show you how your $100,000 could grow in these top stocks, and I'll break down what kind of returns you might expect. In the end, I will show you my best dividend stock that has the potential to turn a $100,000 investment into over $17 million in value, while paying over $100,000 in annual dividends. Before jumping into each stock, let's first talk about what makes a great dividend stock. I'm not just looking for companies with a high dividend yield, although that's important. What really matters is consistency. I want stocks that don't just pay dividends, but those that have a history of paying and increasing those dividends over time. It's a sign of stability and a commitment to rewarding shareholders. These increases help protect your investment from inflation and can seriously boost your income, especially if you're reinvesting those dividends. And of course, I'm looking for companies with strong fundamentals. These are businesses that have weathered economic ups and downs and still come out strong. Lastly, the payout ratio is crucial. This tells me how much of the company's earnings are being used to pay dividends. A healthy, sustainable payout ratio for me is max 60%. With these criteria in mind, I've selected 5 stocks that meet all these benchmarks. So let's get into the first one. Let's kick things off with a financial giant, the Bank of New York Mellon, or BK as it's commonly known. This company isn't new to the game. It's one of the oldest financial institutions in the world, founded all the way back in 1784. That kind of history gives BK a unique edge because it's weathered just about every economic storm you can imagine, from the Great Depression to the financial crisis of 2008. Today, BK specializes in asset management and custody services, handling trillions of dollars in assets for clients worldwide, including governments, corporations, and even other financial institutions. So yeah, when it comes to trust and stability, BK has earned its place at the top. But history isn't the only thing BK has going for it. What makes BK stand out as a dividend stock is its consistent payout and growth. Right now, BK offers a dividend yield of around 2.65%. That might not seem sky high compared to some other stocks, but remember, it's not about the yield, it's about sustainability and growth. Over the past 10 years, BK has increased its dividend by an impressive 10.46% annually. It has a payout ratio just above 30%, which means they're using a relatively small portion of their earnings to pay dividends. That's a good thing. It shows the company has plenty of room to grow those payouts without putting too much strain on their overall operations. So let's get into the numbers. If you invest $100,000 in BK today, what could that look like down the road? After just 1 year, your investment would grow to about $108,860. Fast forward 10 years, and that same $100,000 could be worth over $246,000. And if you hold on to it for 20 years, you're looking at a total of $704,677. But here's where things get really exciting. After 30 years, that original $100,000 investment can balloon to an astonishing $2.52 million. By then, you could be pulling in around $194,311 in annual dividends. That's over $16,000 a month in dividends alone. Now let's turn to a stock that's been quietly powering industries behind the scenes. Air Products and Chemicals, or APD. If you're not familiar with this company, it might surprise you to know just how crucial it is to various sectors. APD is one of the world's largest suppliers of industrial gases, providing essential products to industries like energy, technology, and manufacturing. From hydrogen and helium to nitrogen and oxygen, APD plays a critical role in keeping major industries running smoothly. But how does that translate into a good dividend stock? First off, APD has a solid dividend yield of around 2.44%. Over the past 10 years, the company has grown its dividend payouts by 9.72% annually, which is an impressive rate for a company of its size and industry. And it's not just about the dividends. APD has also seen consistent growth in its stock price, appreciating by 9.21% every year over the last decade. That means you're not only earning regular income from dividends, but your initial investment is growing too. One of the key reasons APD is such a reliable dividend payer is its diversified revenue streams. While the company is primarily known for supplying industrial gases, it's also heavily involved in the clean energy space, particularly hydrogen. Hydrogen is gaining traction as a key player in the global energy transition, and APD is positioning itself as a leader in this growing market. This diversification helps stabilize the company's earnings, which is crucial if you're relying on a stock for consistent dividend payments. Now, let's look at the numbers. If you were to invest $100,000 in APD today, here's what the future could look like. After just 1 year, that $100,000 would grow to about $111,650. Fast forward 10 years, and you could be looking at $302,548. Hold on to that investment for 20 years, and you're sitting on $926,087. But the real payoff comes with a long-term holding. After 30 years, your initial $100,000 investment could grow to an impressive $2.87 million. And during that time, you'd be earning $72,431 in annual dividends alone, giving you a monthly dividend income of over $6,000 by the end of the 30-year period. These returns sound great, right? But I have even better options. In the end, I will show you my best dividend stock that has the potential to turn a $100,000 investment into over $17 million in value, while paying over $100,000 in annual dividends. Next on my list is the KB Financial Group, one of South Korea's largest and most well-established banks. If you're thinking about international exposure in your portfolio, KB might just be the perfect fit. It's a powerhouse in the financial services industry, offering a wide range of services from retail banking and insurance to asset management and investment banking. In fact, KB plays a vital role in South Korea's economy, and its strong market position makes it an attractive choice for dividend investors. One of the standout features of KB as a dividend stock is its solid yield, with a dividend yield of 4.32%. It's higher than what you'd typically see in the US financial stocks, which makes it particularly appealing if you're looking to boost your income. But it's not just about the yield. KB has been steadily growing its dividends. Over the past years, KB has increased its dividend payouts by an average of 8.64% per year. A payout ratio of 32.39% shows that the company is managing its dividend payments in a sustainable way, while still retaining enough earnings to reinvest in its core businesses. Currency fluctuations pose a risk, as KB is a South Korean company and changes in the won's exchange rate could impact your investment. However, KB's strong financials and key role in South Korea's financial system support long-term growth. So what does that mean for a $100,000 investment in KB? After just 1 year, you'd see your initial investment grow to about $109,971. Fast forward 10 years and your investment could be worth $273,876, thanks to both dividend payments and stock appreciation. Hold it for 20 years, and that $100,000 could become $873,268. After 30 years, your investment could be worth a massive $3.4 million. And by then, you would collect around $298,232 in dividends, giving you a monthly dividend income of nearly $25,000. Next, at my number 2, is a company that's riding the wave of renewable energy, NextEra Energy, or NEE. If you're interested in the future of energy, the stock might be already on your radar. NEE is one of the largest utility companies in the world, but it's not your traditional energy provider. While they do generate electricity through conventional methods, they're a leader in the renewable energy space, particularly in wind and solar power. Of course, as with any investment, there are risks to consider. One potential challenge for NEE is regulatory risk. Because it's in the utility sector, NextEra is subject to government regulations, which can sometimes affect profitability. However, NEE has proven time and again that it can adapt to changes and take advantage of new opportunities, especially in the clean energy space. But why is NEE a great dividend stock? First off, it offers a dividend yield of about 2.41%, but what makes it truly compelling is its consistent dividend growth. Over the past 5 years, it has increased its dividend payouts by a remarkable 11% annually, not to mention an average share price appreciation of 13.70%. What's even better is that this growth is underpinned by the company's solid financials and its aggressive expansion into renewable energy, a sector that's only going to grow in importance in the coming years. Now, let's get into the numbers. If you were to invest $100,000 in NEE today, after just 1 year, you'd see your investment grow to about $116,110. But this is a stock where patience really pays off. After 10 years, that $100,000 could grow to an impressive $434,991. Hold on to it for 20 years, and you'd be looking at $1.81 million. And if you're in it for the long haul, 30 years, your $100,000 could turn into a staggering $7.28 million. Not only that, but you'd be earning about $69,134 in annual dividends, giving you a solid monthly income stream of nearly $5,800. And now, finally, taking my number 1 spot is Visa, one of the most recognized names in the world of finance. Visa doesn't need much of an introduction. As a global payments powerhouse, Visa is behind billions of credit and debit card transactions every single day. While it might not scream dividend stock at first glance, Visa is a fantastic example of a company that offers more than meets the eye when it comes to dividends. More on that later. Visa faces growing competition from fintech, digital currencies, and blockchain innovations. However, its history of adapting, global reach, and massive transaction volume provides stability and help maintain its dominance. Now, Visa's dividend yield is lower than any other stocks we've discussed, sitting at around 0.75%. At first glance, that might not seem like much, but don't let that fool you. It more than makes up for in dividend growth and stock appreciation. Over the past 10 years, Visa has increased its dividend payouts by an incredible 17.92% annually. That's one of the highest dividend growth rates you'll find in any stock, especially in the financial sector. Combine that with Visa's track record of rapid stock appreciation, 17.98% over the past decade, and you've got a recipe for serious long-term gains. So what does it look like if you invest $100,000 into Visa today? After just 1 year, you would see that investment grow to about $118,730. Fast forward 10 years, and that $100,000 could tune into $556,584, thanks to both stock price growth and those steadily increasing dividends. If you hold it for 20 years, you're looking at $3.1 million. And if you're in it for the long game, after 30 years, your investment could be worth a staggering $17.2 million. Over that same period, you'd also earn around $106,928 in annual dividends, giving you a solid monthly income of nearly $9,000 by the end of it. Visa proves that sometimes the biggest rewards come from stocks with lower yields but higher growth potential. Want more? Click the video on the screen to find out how to turn $100,000 into a portfolio valuation of $20 million.